Okay, this and get our participants in. Okay, you guys ready? All right. Good afternoon, everyone, and thank you all for joining us for today's month of service presentation of our Money, Health, and Wealth Financial Capability Series. Today, we're here to talk about living benefits and insurance, how to create your own GoFundMe. My name is Nia Murray. I am the programs coordinator with Neighborhood Recovery Community Development Corporation, and we are one of the partners in the A Month of Service collaboration. Also included is the City of Houston's Department of Neighborhoods, and joining us today, we have Ms. Rachel Gutierrez. Also, on behalf of Neighborhood Recovery, we have our sponsoring partner who will be presenting the information for you today, as well as the other information in the series, Ms. Monet Cheney with Family Houston. But included in the partnership, we also have Lone Star Legal Aid, the Harris Central Appraisal District, the Harris County Tax Assessor Collector's Office, um, Texas Legal Services Center, the Earl Carl Institute, Houston Volunteer Lawyers, and the Houston Bar Association. And together we make up a month of service. And basically what a month of service is a collaboration of all 9 of our organizations. We come together on a monthly basis and offer a variety of different workshops relative to asset building, asset protection, community empowerment, and the maintaining of generational wealth. We know that there are a lot of underserved communities that are out there that don't have access to a lot of information, resources, and services, and don't know where to go for particular things. So we decided to collaborate several years ago and come together in a collective effort to try to reach more people, create a larger impact, and get as much information out to the community as we possibly can. So individually, we were kind of doing our own thing, but we thought it only made sense for us to kind of come together collectively, since we all service the same community. We have, the city of Houston, Harris County, and even surrounding areas as our target, as our population of people that we serve. So it only made sense for us to come together and reach these people collectively. So if you are joining us today for the first time, thank you very much for joining us. For those that are repeat, folks that come back, thank you for continuing to return and support the A Month of Service collaboration itself. So information that we do present here today is for educational purposes only. If there's any information or any particular needs that you guys have, we do encourage you to reach out to all of our partners. The information that Ms. Cheney provides here today for you guys, you do have the opportunity to ask whatever question it is that you'd like. However, if you kind of have some personal, real detailed information, she will be providing you with her information throughout the presentation, so that you guys can contact her for a one-on-one session. In addition to that, neither one of us are the insurance experts. Therefore, we will have an insurance presenter that's going to be providing more detailed information for you after her presentation is over with. So again, this will give you the opportunity to ask those kinds of questions of those professionals. Do keep in mind that the people that do present information here today, they are volunteers. They do take time out of their schedule every day to provide this information for you all, to provide the services for the community folks. So we really thank you. We really appreciate you, Monet, coming back every single month year after year to continue to support us and to give this information out to the community. Before I kind of go any further, I want to say, if you are joining us on Zoom, please feel free to type your question into the chat. Or if you'd like, you can unmute yourself at the end of the presentation and ask your questions directly of either one of the presenters. We are broadcasting live on our social media platform on YouTube, and will be shared on Facebook and Instagram as well. So do keep that in mind as you're asking your questions. So we want to try to protect your privacy as much as we possibly can. So ask that you don't give out any personal detailed information while we're on the live, to kind of get out there for everybody else to have access to as well. So we want to, do keep that in mind. But if you are joining us on YouTube or on Facebook, I am monitoring the comment section, folks. So feel free to type your questions in there that you may have as well. So with that being said, we are going to go ahead into our introductions, and we will get started with the presentation. And again, later on, we'll have our insurance agent that's going to be providing the information for you guys. So with that being said, Ms. Rachel Gutierrez with the City of Houston's Department of Neighborhoods.
Thank you, Nia. Good afternoon, everyone. As Nia mentioned, my name is Rachel Gutierrez. I am a Community Outreach Coordinator for the Department of Neighborhoods, Office of Neighborhood Engagement. On behalf of my two bosses, first one, my big boss, which is Mayor Whitmire, and then our Director Herbert Sims. We thank you for joining into today's workshop and being a part of the month of service. We want to thank our partners for their continued support in this collaboration of providing you all with information that has some sort of effect, whether positive or, even if you're going through a difficult time, or even if you're not and you're just preparing for it just in case it may happen in the future. Being empowered and being educated is at the forefront of that. And so if it's not you, then you might know somebody that this information could benefit them on. So we definitely want you to continue to be engaged, spread the information to those near you, whether it's at your local faith center, community center, grocery store, at the bank. You might just run into somebody that may benefit from this information. So feel free to invite them to attend these workshops that we have on a monthly basis. We offer these workshops throughout the month, different topics. So some topic is going to have some benefit on somebody, whether it's you or somebody that you know. So please continue to invite them for you to be involved, because we surely appreciate it. And we obviously want to continue offering these workshops for you all, the community that needs it the most. Their need is still there. And also, if there isn't a workshop that's currently available and maybe there's something that you would like to see or receive education on, feel free to reach out to myself or Nia. We will definitely work on that to see if we are able to put that on for you. But we want to be able to continue these workshops, so please keep engaged with us. And obviously, where can you find free information that's not going, or information on financial literacy or on generational wealth, or any other type of maybe legal aspect in your life that you're going through, whether it's free. You're having experts come out and volunteer their time. So we are appreciative of that. But, usually you'll have to pay for these services. So definitely take advantage of this important platform where you are able to be educated and empowered the right way, from the experts themselves. And so, again, I know I'm harping on it, but continue to be involved and engaged and take advantage of this beautiful opportunities. But I will get off my horn here, and then I will let Ms. Cheney go ahead and introduce herself. So I appreciate you tuning in and enjoy the workshop today.
Hi, good afternoon. My name is Monet Cheney, and I'm a senior financial coach with Family Houston. And I do come every month to present financial literacy topics for free to the community. Like they said, just spread the word, as well as not only do Family Houston collaborate with NRCDC and the City of Houston to provide this free information. Family Houston provides free financial coaching and employment coaching as well. So at the end of the presentation, I will go into more details about how you can schedule an appointment to obtain free financial coaching at Family Houston. So for this month, we are going over insurance and living benefits. Like Nia said, I'm not an insurance agent, so I'm not an insurance expert, but as a financial coach, these are some things that we talk about in our financial coaching sessions, because it might be an expense that you have in your budget. And of course, if you have certain assets that needs protection, then of course you're going to need to have you would need to get insurance and have insurance costs in your budget, as well as when it comes to life insurance. If you want to be able to prepare for the future for your children upon your death, then of course I would go over some basics when it comes to life insurance, and then we have the insurance agent that's going to come on later that will go into more details as well as answer any detailed questions you might have. So just for our learning objectives today, we're going to identify the importance of having insurance, and then identify ways to prepare financially and legally for the future. So I just want to start off with stating what risk is. So risk equals the possibility of a financial loss. So when you're thinking about having insurance coverage, you have to consider, like, what is the risk that something might happen, that there's going to be a big financial loss. For example, if you purchase a vehicle, that vehicle is an asset. It's an asset that you need to get to and from work, take your family around the city, and it's an expensive asset. So although that's an asset that's worth some money, but of course, if you're financing that asset, then there's a liability attached to it. So that means that you want to make sure that that vehicle is in good condition at all times, as well as it's a risk that you can potentially hit someone else. So that's how that becomes a liability. So when you have a vehicle, that means you have to have auto insurance to cover any possible financial loss that pertains to your vehicle, whether it's you hit something and now you have to cover that expense for hitting something that you're liable for, or someone hits you and now you have to get your vehicle fixed. So risk is essentially the possibility of some form of financial loss. So why is risk important for insurance? So risk is what makes you decide whether you need insurance. Risk is what insurance companies measure when determining whether to offer you insurance and how much it will cost. So if you're someone that you pay, normally you change your insurance either once a year or every 6 months. And if you notice that your policy rates might fluctuate, then the reason why they're fluctuating because it's based on the insurance company measuring how much of a risk is it that they're going to have to pay out on some type of incident. So it can be with a home. We live in the city of Houston. We already had 2 major storms so far this year. So as a homeowner, your homeowner insurance are going to be measuring, like, how much of a risk is it that they're going to have to pay out on a claim for any type of incidents in the Houston area. Same thing with a vehicle. I found out this year my auto insurance went up simply because I live in the state of Texas, and they say that it's a lot more drivers here. So there's more of a risk of me having to file an insurance claim. So that adjusted my insurance premium went up because of that. So that's why understanding risk is very important when it comes to insurance and whether or not you need to get certain insurance, and then determining how much that insurance is going to cost you. So when you're thinking about, like, what type of assets that you're getting, I'm sorry, am I still sharing the presentation? Because I think it disappeared.
Yes, you're on the why is risk important for insurance page.
Okay, I'm back to it. My screen had changed. I'm sorry. But yeah, so it's very important to understand what risk might occur in your life when it comes to purchasing certain assets. So if you're going to purchase a car, a house, even if you're renting, you're going to want renter's insurance to cover any incidents pertaining to your apartment or the home that you're renting. Same thing if you have a family and you're considering life insurance to cover any costs if something were to happen to you, so your family can be taken care of. Well, I thought I saw a question in the chat, or I saw
Oh, it
was
was
there a
just an
question in the
agreement.
chat?
Yeah, we're
Yeah.
just commenting on this insurance going up.
Okay. I'm gonna tell you, I was mad, but there was nothing I
Yes.
could do about it.
All of it's going up. Auto insurance, homeowners insurance, the flood
Yes.
insurance, everything is
Yes.
Yes. And then to let you know, like also when you're thinking about risk and auto insurance, like I have a young driver on my auto insurance. So me allowing my son to get his driver's license and to start driving, that's adding an extra risk. So the insurance company is looking at, you have a young driver on your insurance. He haven't been driving for a long time. So there's a higher risk at me or him filing a claim because of that. So those are things to consider, even like where you move, like where you purchase a house. Is there a higher risk where you're moving to or where that home is located for there to potentially be some type of insurance claim, like Houston floods? So are you moving into a flood zone? Again, and then again, we have hurricanes. Where we're in the zone where there's hurricanes, and then coming with hurricanes and storm, there's gonna be tornado. So when you're considering like purchasing certain assets and understanding like what insurance policies and everything that you're going to need to get to protect those assets, just consider what the amount of risk is that pertain to that asset that you're purchasing and then your current life situation. Okay, now how do we handle risk? First, there's avoidance. So avoidance is choosing not to participate in an activity because of the risk involved. So maybe you don't want to ever get a driver's license and you're never going to drive a car because you don't want to risk having an accident. Or like I said, when it comes to purchasing a home, maybe you don't want to move to a certain area because it's more likely that that area will flood. So you're practicing the idea of avoidance. You're avoiding certain activities or certain areas because there's more risk involved of an incident happening. Next, there's retention. So saving money in case of future losses. For example, putting $1,000 in savings in a savings account in case of a car accident. So this is building an emergency fund and having an emergency fund to cover any financial losses. So everyone should at least have some form of emergency fund to cover any emergencies that happen. And of course, like if you have a car, you probably want one to cover any like repairs, any accidents. If you have a house, you're going to want an emergency fund to cover any deductibles in the case that something happens with your house that you have to fix. So retention is saving money for the future in case of any emergencies. And then lastly, transfer is passing the risk on to an insurance company. For example, paying a monthly fee for an insurance policy and expecting the insurance company to protect your assets. So when you're thinking of assets that cost a lot of money, for example, you have a car, a house, again, renter's insurance, you have to protect that dwelling as well as the property in your dwelling that you're renting. And then as well as like life insurance when it comes to funeral costs, as well as covering expenses for your family once you're gone. And then medical insurance covering high, like the cost of taking care of your body, taking care of your family's health and your health. It's like you're passing that expense on to the insurance company, and you're making monthly payments in order for them to cover that very high financial responsibility that you have to protect those assets that you're purchasing. Now, what exactly is insurance? So insurance is a legal contract that, again, transfers risk from a policyholder to the insurance provider. So the insurance provider is pretty much paying the bulk of that expense, and you as a policyholder, you're contracted to make your monthly premium payment, as well as in the case of a claim, then you might have to pay a deductible, or you might not have to pay anything out of pocket, depending on how your insurance policy is set up. And then also it's a protection against large scale financial loss. So again, if you don't have the funds to save up a lot of money to cover those assets, then it's good to have an insurance policy to protect those assets, because again, you're transferring that large scale financial loss onto that insurance company, and you're paying a smaller portion of that out of pocket. And in some cases, you are required to have insurance on certain assets, especially assets that have a lien holder. So if you're financing a home, financing a car, then in some cases, the bank is going to require that you have insurance on that asset. And then lately, maybe I would say in the past 5 years or so, a lot of apartment complexes are wanting or requiring that you have renters insurance whenever you sign your lease agreement. I'm not for sure how it is with private owners, but I know with a lot of apartment complexes do require you to have renters insurance. Here are the different types of risks that insurances cover. So you have your auto insurance. So that's going to cover vehicle damage, property damage, and medical expenses. Homeowners insurance is going to cover the dwelling, other structures, personal property on or off the premises, loss of use, liability, and medical payments. And then your renter's insurance is going to cover your personal property, loss of use of that property, liability, and medical payments. And then life insurance provides for beneficiaries in the event of the policyholder's death. So just going a little bit more into auto insurance. State laws actually require that all motor vehicles have liability insurance to cover injury to other people or damage to their property. If you have a loan on your vehicle, your lender will also require physical damage coverage. So that's where your lender is requiring you to have full coverage. Because in their mind, they want to make sure that that asset is protected until that loan is paid off. You may select a higher deductible, the amount you pay out of pocket before insurance kicks in, and receive more affordable rate on the insurance premium, the cost, and that's the cost of the policy. If you have your emergency savings in place, you will feel more confident about taking out a higher deductible policy, which will lower your premium cost. So for everyone, because I know most of us are all familiar with auto insurance. So we do know that when you are going to determine your auto insurance policy, there's all these different factors that you have to consider. And then some factors with your auto policy cost more than others. So there is your state required numbers. So there's like factors on your insurance policy that's required by the state of Texas that you have to meet that are standard. And then there's other options you can look at that provide more protection to your vehicle. So of course, as you're playing around with those different benefits and different amounts on your insurance policy, then that would change the cost of your premium. And especially with your deductible, if you notice, like with some insurance company, your deductible can be as low as like $250 deductible, or it can be as high as $1,000 deductible. And the higher your deductible is, the lower your premium is going to cost. So that's where that emergency fund can come into play. Because if you have an emergency fund to be able to cover a higher deductible, then that means you can lower that monthly cost that you're paying for your auto insurance. So when you're looking at your auto insurance, just making sure that either if you don't understand what you're doing when it comes to selecting the different factors or the different things when it comes to your auto insurance, talking to a auto insurance agent will help you make sure you're picking the right things for your policy to fit into your budget. For home insurance, homeowners insurance, it covers your home and possessions in your home. The personal liability coverage in a homeowner's policy protects you from loss resulting from any injuries that may occur on your property. So just say, for instance, someone is visiting your home and they get injured, or there's an accident and they're injured. So there's protections on your policy to cover those medical expenses. Your mortgage lender will require you to carry a certain amount of insurance coverage as long as a mortgage is in place. And you may also consider a higher deductible insurance plan to save money on your homeowner's coverage. Standard homeowners coverage insures your home and its contents against loss from such risk as fire and theft. You may require special insurance for flood, earthquake, or other risks specific to your area. Contact your state Department of Insurance for more information on insurance in high-risk areas. So that's what I was talking about earlier. Like when you're deciding on obtaining certain assets, consider the risk in the area where that asset is going to be. So that's going to help you determine what type of insurance coverage you're going to need. Another type of household protection are home warranty plans. These are service contracts that protects the homeowner for unexpected costs for repair or replacement of major systems. This might include heating and air conditioning, plumbing, electrical system, and water heater. So again, this is just another way to offset the bulk of the cost to repair certain things in your home, especially those things in your home that cost a lot of money to repair. And then for renters insurance, if you're renting a home or apartment, you should purchase renters insurance or content insurance to cover your possessions against loss from fire or theft. Your landlord's insurance will only cover damage to the building and not what's inside. So it's not going to cover any of your possessions if there's any type of fire or if someone comes and robs your home. Also, if someone is hurt in your rented home, that liability is yours and not the landlord. So your renter's insurance will actually cover if there's an accident in your home and someone is injured. And again, a lot of apartment complexes actually now require you to have renter's insurance. But if they don't and you're a renter, I would highly suggest that you consider getting it. Renter's insurance is actually very affordable. I know clients that pay as low as like $12 a month for renter's insurance. And again, recently we had major storms in Houston where there was a lot of people without power. And if you didn't know, like your renter's insurance covers if you're unable to stay in the home that you're renting. So they might cover the cost for like a hotel stay, as well as like we didn't have power for a few days. So if you lost food because of that, your insurance company would cover the cost of you replacing food. Again, I've actually had someone that accidentally got hurt in an apartment I was renting, and that's when I found out that renter's insurance cover a cost like that. So to me, it's very important to have renter's insurance because it's not an expensive cost. And a lot of times you can bundle your renter's insurance with your auto insurance to get a discount on your policy because you have more than one policies under that one insurance company. So if this is something that you don't already have as a renter, I would say that it's a very important insurance to have. Are there any questions so far?
Nothing in the chat just yet.
Okay.
Oh, wait. Someone says, I purchased an extended warranty on my used vehicle. Warranty was 150,000 miles or a certain date, whichever comes first. Is there such a thing as extension to an extended warranty?
Is that for auto?
Yes.
For vehicle?
For auto. Can you get extension on an extended warranty? If you already buying an extended warranty, is there like additional that you can pay after that?
I think so, because I've seen or I've had companies contact me about getting additional warranties after a warranty that I had was already have already expired. So I think there is. I can't speak on any companies, so that would be something I would actually have to research. But I've had extended warranty companies actually reach out to me. I don't know if anybody else had had warranty companies reach out to them before as well. And then I also would think with the dealership, you can possibly speak with the dealership to ask about any warranty options. And then also whoever that extended warranty was with, I would check with them and see if they have additional options or warranty packages that you can purchase. Do we have any other questions or that's it? Good.
I don't see anything else there.
Okay. So just moving on for life insurance. I'm just going to go over the different types of life insurance and just some basic information on what they are so you can have an idea of just the differences between term and permanent life insurance. So just starting with term insurance. Term insurance is less money, buys you a larger amount. It's very affordable for younger policyholders. There's a set period of coverage, which is why it's called a term. So it is for a set period of time. Most policies can be canceled or renewed at the end of the term, and usually more expensive each time you renew. Does not earn a cash value and usually can be converted into a permanent policy. Now, for life insurance, that for the permanent life insurance, this tend to be more costly. It offers a lifetime coverage. It can earn cash value, which can be borrowed against, and usually cannot be converted into a different policy. So there's two types of permanent life insurance. There's whole life. Whole life is less complicated option for permanent insurance. Premiums do not change. The benefits do not change while policy is in effect, and it accumulates cash value more slowly. And then for universal life, flexible payment options for your premiums. You can make changes to your benefits based on your needs and lifestyle, or keep the death benefit level. It accumulates cash value at a guaranteed rate, and then policy features many options to tailor it to your needs. So just a few takeaways when it comes to having insurance and considering what type of insurance to have is understand your risk factors and value of property to know how much insurance coverage is needed. So just understanding like what is the likelihood that you're going to have to make a claim, as well as uh, how much is the value of the asset that you're wanting to protect. There are many types of property, health, and life insurance. So do your research and seek good advice. Again, there's different insurance companies out there. So making sure that you're getting the right policy that fits your needs. And then shop around, try to find something that's affordable for you and your family needs that fits your budget. And always just make sure that you're asking the right question when you're speaking to insurance agents or insurance experts. Again, so do your research to make sure that you're getting what is needed for the types of properties and things that you're wanting to cover. Take advantage of group insurance through your employer or other associations you may have. Sometimes with the group insurance through your employer, especially for medical, can reduce the cost that you have to pay out of pocket. Anticipate the needs of your family and decide how much you can afford to pay. So that's where that monthly budget comes in, because that helps you determine what fits in your budget to make sure that you're getting the right coverages that you can afford. Shop around to get at least 2 quotes. I'm someone, especially for my auto insurances, that's the one that I'm normally, auto and renters insurance are the ones that I'm normally paying. And so every 6 months, I shop around and look at different quotes to see like if there's any like ways where I can save money. There are insurance brokers. If you don't know, if you haven't worked with an insurance broker before, an insurance broker, they actually do the shopping for you. So you pretty much tell them what coverages you're looking for and what your needs are. And then they shop multiple insurance companies for you. Or you can simply go to those individual insurance companies and let them know like what you're needing and what coverage that you need, and do the individual quotes yourself. Again, consider higher deductibles to lower your premium. but have that emergency fund set aside to cover those deductibles. Ask about other discounts that may be available to help reduce your cost of coverage. So, for example, there's good driving records, safety equipment, multiple policies with the same provider. If you have children, I know there's a good student discount. If you have children in the household, there could be discounts based on a company you work for, or based on an association that you're a part of, or a club that you're a part of. So always check with your insurance agent and ask them about any discounts that can help you save on your monthly insurance premiums. Review your insurance coverage annually to make sure you have appropriate coverage as your situation changes. So as there's life changes, just making sure that you're reviewing things to make sure that you have enough coverage to cover any financial losses. As with all investments, be sure to get all the facts before parting with your hard-earned money. So again, make sure you understand the insurance policy that you're signing up for and that you're going to be paying for. Make sure you understand all the coverages. I have friends that, again, they was affected by the storms recently, and one of my friends said she didn't know that her insurance deductible had went up, and so it went from a lower amount to, I think she said it was going to be a 10,000. It went from a maybe around a 5,000 deductible to $10,000 deductible, and she didn't know that those changes had happened. So just make sure that you understand your policy. So when there is an emergency or there is a time that you're going to have to use it, that you're not blindsided. And understanding your policy is, again, asking the right questions, reading through your insurance policy to make sure you have a full understanding of the policy before you sign it. So I want to move into preparing financially and legally for the future. So first, to prepare financially is, again, setting up an emergency fund. So setting aside 3 to 6 months of expenses to cover monthly bills in case of a loss in income due to a job loss, a medical emergency. This is something you don't have to do right away, but it could be a goal that you have set in place. Is having those 3 to 6 months of expenses saved, just so you'll be able to cover all of your basic needs. So when I say 3 to 6 months of expenses, it's not going to be all of your current expenses that you have now, that if you're currently employed, because we have some expenses that are wants or not necessary. When you're thinking of an emergency fund, you're only thinking of expenses that are need-based, that you're going to need to maintain. So this is not going to include all of your wants and non-essential expenses. And you just want to make sure you have this, again, so if there is a loss of income, you're still able to cover housing, to cover any like medical expenses, food. If you have a car that you have to maintain because you're going to need your car. So just to cover all of your necessary expenses. Then next is having health insurance. I created this for the pandemic, which is why I said the pandemic is unpredictable, but just having health insurance, because life in general is unpredictable, and then having health insurance can help lessen the amount of medical debt in case you or someone in your family gets sick. If you are not insured, speak to an expert of what options are best for you and your family. And again, ask questions to understand your coverage. And then if you are insured, speak to your provider anytime you need to understand your medical or health insurance to make sure that you have the right coverages for your family, for yourself and your family. And then lastly, life insurance. If you have someone in your life that depends on your income, speak with a professional on options of the best life insurance policies that work best for you and your family. And just continuing on, when it comes to preparing financially and legally for the future, you will have to consider asset protection and health planning documents. So this is where where the legal aspects come in. So first, there's the last will and testament. And I'm not a lawyer, so I'm not here to give legal advice. These are just some definitions of what these different documents are. But I do recommend that you consult with a legal expert when establishing health and end of life planning documents. And I believe in our CDC, you all do a presentation.
Yes, in conjunction with the as part of the month of service collaboration, we actually have a will and estate planning workshop that's scheduled for Thursday, and I'll get into a little bit more detail about that.
Yes. So I'm just going to go over just a few definitions of some planning documents that you should have for your family. So there's the last will and testament. A will is a legal document that determines what happens to all your possessions after you are no longer here. A living will is a legal document that allows you to decide in advance what life-sustaining medical treatment you would or would not like to receive. A healthcare power of attorney. This is a legal document that designates an individual that can make medical decisions for you should you become incapacitated. Advanced financial power of attorney is a legal document often referred to as a durable power of attorney that enables you to appoint another person as an agent to handle certain financial/business matters on your behalf in the event you become incapacitated. And then trust agreements. This is another tool for passing assets to named beneficiaries while avoiding potential expense and time-consuming probate court proceeding. So it's very important as you again are planning for things such as assets protections as far as like your insurance. You also need to consider some of these assets protection and health planning documents in the case that something happens to you. And again, please consult a legal expert when it comes to establishing these documents and making sure that everything is done properly and available in the case that they are needed. Did we have any questions about any of the information that we covered?
Nothing in the chat just yet.
Okay. Well, I do want to talk about how to schedule for financial coaching. So just to give a brief overview, Family Houston, we are a local nonprofit organization, and we help with 3 areas. So we have financial stability, which includes our financial coaching and our employment coaching services. We have mental health counseling counseling, as well as we have community support specialists to help you with basic needs, as well as we have specialized community support specialists that help with veteran resources. Our financial stability program is free of charge because we are grant funded. So if you are looking to work with a financial or employment coach, you can either scan the QR code here on the screen, or you can go to familyhouston.org, and under programs and under financial coaching, there is an intake form. You'll just click on that intake form, complete the form, and then the form will be sent to one of our coaches. We do have coaches in West Houston, so that's going to be the Katy, Brookshire, Waller County area. We have coaches in South Houston going towards Galveston, so in that Bay area, Clear Lake area. And then I cover Central Houston and Southwest, so Fort Bend area, as well as I can cover North Houston as well. There is an option that if you would like to select me as your coach, you can include, I'm going to have my contact information on the next slide, so you can include my name on the intake survey if you would like to meet specifically with me. Otherwise, the coach that they will assign you would be the one closest to your zip code. And as financial coaches, some of the things that we help with is we help you create personalized plans for organizing your finances, which include like helping you create budget plans, as well as understanding like your spending and income, explore ways to reduce debts and reprioritize your spending. We can help with building savings and building assets, and increasing your net worth overall. We do help with credit. So if you need help learning how to improve your credit history, so it can be through doing credit repair, or it can be just simply building your credit history. We do help with that. And all of our sessions are tailored to the actual client. So that session with one client is going to be totally different from a session with another client, because it is tailored to the financial goals that you're wanting to achieve. And here's my contact information. You can contact my cell via phone call or text at 832-987-2023, or you can email me at mchaney@familyhouston.org. So that's mcheney@familyhouston.org.
Okay, I'm trying to reach the insurance presenter. Hold on.
I can definitely say I can keep talking.
Keep it up until you see my face. Go ahead.
Okay, I do see some, there was some information added in the chat.
Okay. The comments that were in the chat was just about Car Shield,
Okay.
and how some of those commercials can be misleading when it comes to those kinds of coverages and buying those kinds of plans.
Yeah.
There was a question here. It says, I have seen where term policies can have cash riders attached. So if not used by the end of the term, you get a percentage of your premium back.
Okay.
Uh, yeah, I believe those are all the comments. And I didn't have any emails or anything like that that was sent to me well in advance.
Okay, okay.
I am still trying to, our presenter is having a little bit of trouble with logging in. So we're gonna have to improvise for a little while until we can get this all figured out. You know, the joy of modern technology could be a gift and a curse. You know, it's convenient,
Right.
but not everybody's able to do it. But again, we wanted to make sure that you guys had this information, just at least to kind of get you started, get you to having the conversation. The Money, Health, and Wealth Financial Capability Series, it's anywhere from the living benefits and insurance to debt management to savings to making large purchases, and basically overall your conversation about your relationship with money and planning ahead. And we felt that it was important to include it in the a month of service collaboration, because like Monet had kind of touched on, when you're talking about your asset building and building those assets, you also have to protect them. So it's important to make sure that you have a will or an estate plan or an insurance policy to make sure that that your family is protected, that your assets are protected. And most people, between insurance and real estate, that's the quickest way for people to build their generational wealth. You know, people have those insurance policies and, that have been passed down. I don't know about y'all, but I remember my grandmother had insurance policies on everybody in the family, and everybody paid for their own policy. Everybody chipped in every year that came by. That's when the insurance man used to come and sit on the couch on on Sunday afternoons or whatever, and come in and collect the policy, the premium money. I'm not sure how many of you guys remember that, but I definitely remember my grandmother and our insurance guy that used to come by the house. Now you just pay your stuff online. You don't even know who your insurance agent is. You don't even know what kind of coverage you got. People just know that they're paying a bill, that they got it, but they don't know what kind of coverage that they have.
Yeah.
It's important to make sure that you have that kind of a relationship with an insurance agent that can explain to you what it is that you have. Oh, I thought this was covered, like the freeze that we had several years ago, when folks, when their pipes and things were bursting in their house and they realized that they didn't have that kind of water coverage for their house. Nobody had a clue. Nobody knew that they didn't have that kind of coverage. Well, one, Texas wasn't likely to freeze. So who
Yeah,
thinks
I
they're
mean,
gonna
we have hard freezes, but not like that.
never like that. So are you all connected with the VA to assist veterans? Us individually, I do believe that some of the legal service partners actually have services directly for veterans that they offer. There are some programs and things like that are geared specifically for veterans, but we as a collective are not connected directly to assist veterans. But
Yeah,
if there are some services that veterans are looking for, then definitely feel free to reach out to myself or Rachel, and we can see, where we can get you some kind of resources or whatever it is that you may be looking for.
yeah, and I think with Family Houston has a veteran service program that we are grant funded through, that provide assistance to veterans. And then they might know, and then those case managers or community support specialists, they specialize in resources for veterans. But I don't think we have like a direct connection with them. I just think that we're part of a grant funded program that provides certain resources to assist veterans.
Okay. Great. Still trying to connect, still can't get in here.
Well,
Um,
I have
Is
someone.
there, I do have a question. Is there, I know you mentioned those insurance brokers.
Mhm.
Do you know if there's a fee that they charge for providing that service?
That I'm not sure.
generally they don't. They just give you the
Yeah.
insurance quote. basically because they're gonna want the business from you. They generally don't charge a fee for that. I'd almost be a little bit leery if you came across an insurance agent that actually charged you for a quote to give you
Right.
that information.
I
So
don't
I
think they charge
yeah,
you.
I don't they should not charge you. Be careful about, I will warn you about going online to put in your information for different people, because you will start getting all kinds of spam messages and
Mhm.
phone calls from all kinds of all over whomever. So if you have the opportunity to speak with someone locally, then that would definitely be the way to go, as opposed to just kind of doing some random search online because you don't know basically who you're talking to or who you're giving your information to. I mean, and just not only that, you just don't want to get spammed and bombarded with all of those different messages and things like that. So
Oh, yeah, because I know sometimes if I go on State Farm and I put a quote in, I have like 10 State Farm agents calling
yeah.
me.
They're like those tow truck people. As soon as you hear one, you see all the swarm
So
of
you
tow
did a
trucks coming in
Mhm.
quote.
everywhere. Yeah, everybody wants to give a quote, but it's competitive out there. But and definitely when you're out trying to get insurance quotes, talk to multiple insurance agents at the same time, and see who's offering you what. And we always try to tell folks when we're in our home buyer class, if you want the best of insurance, ask your insurance agent what kind of insurance they have, and you want what they have, and then have them to quote that because they're not going to shortchange themselves. So
Right.
if they got the Cadillac of policies, you want to know what the Cadillac looks like versus what the Pinto looks like, and kind of adjust your budget somewhere in between. Cecil,
Hi, I have a
hello.
question about
Yes, ma'am.
so I heard that the best way to get like the best policy is to renew it every year. This is specifically with car insurance. Is that true? I've been with the same company for like 10 years, but I keep getting told to switch it out every year because you get like a better deal like that. I don't know if
It's
that's
all it's always, it doesn't never hurt you to switch, I mean, to get quotes from anybody.
I do it every 6 months.
I mean, yeah, it would be great for you
Um,
to you just
I just
ask.
like to see what's
Mhm.
out there. But I was told by insurance agent that it's better to stay with one company for a long time because then your insurance rate would be lower with that particular company. But I don't know. I just change every. It's just something I've always done. And one thing that I started to do just to make it a lot easier for me this year when I was shopping around, I put all of my coverage, all of my information, all on one document. So I took a Word document, put all of my information that the insurance agent is going to ask for. And then I have my declaration page. So when I want to show them, like, this is the coverage that I already have. Here's all of our information. Everybody is going to be on a policy. So I don't have to keep retyping stuff over and over again. And that's also a way for me to just be able to review it like once a year because all the information is in one place. So that's something I would suggest doing. So it could just make it a lot easier when you're shopping around for different quotes.
Okay. All right. And welcome, Mr. Petrie. Thank you for joining us as well.
Thank you. I'm sorry I had problems at the beginning. It's been a long day for me of
It's been a
meeting.
long day for all of us today. Don't worry about it. No
But
problem. All
to the
right.
to the movement that's going on right now, two things. One, I would at least get a quote every year from a variety of. I love what the last lady just told us about having the declaration page and all the information, so it's easy for her to get apples to apples quote as she goes from one person to another. Okay. Um, and that's what typically will happen is someone will quote you, but they'll have different limits. And then those different limits on those different types in those different categories, whether it's your car insurance or your health insurance, will always affect the premium. So you always want to try and make sure that you're comparing apples to apples. But if you're not, you're at least aware that it was not an apples to apple comparison. So you're not making a decision based off of different information. So yeah.
Exactly. And it looks like we've got our other presenter that's joined us today, Mr. Cortez Page with Page Evolution Insurance. So welcome, Cortez. Thank you for joining.
Thank you. Thank you. I apologize. I got tied up with the previous meeting, but I'm happy to be on.
Well, thank you very much. So Ms. Monet has already kind of gone over some of the benefits and the needs for having living benefits and insurance, and she kind of touched on a couple of the different policies. So you can kind of, start us off from there.
Got it. Okay, great. So I am. I've been in insurance. My introduction to insurance with State Farm. I was with them for a couple years, just writing renters insurance, auto insurance, and then life insurance. Kind of just fell into my lap. I had somebody that presented it to me, and felt more of a calling to take on the role of a life insurance advisor, because you get in an accident, you can get your car fixed, something happens to your home, you get you can get your home fixed with your insurance. But the loss of a life really impacts a family, not only just the living family, but generations. So I found that it was a bigger impact. So I am now currently an independent agent. I have access to over 20 different carriers, and the benefit in having an independent advisor is that they have the ability to shop the prices and shop the rates, and give you more options on what you're needing as far as like insurance and coverage. Something that we run into often is denials. People are denied for having pre-existing health conditions. And so the benefit in working with somebody that has multiple access is that if you're denied with even your second company, your second try, they can just keep going down, their list of carriers and figuring out, okay, who will insure my client. And then we also have like guaranteed issue products, right? And I'll get into that. But the breakdown of the different types of policies you can have, and I don't know if we've touched on this, you can have a permanent or you can have a temporary. Within a temporary, you have options to have a return of premium. So you have a 10-year, 15-year, 20-year, 30-year term. But at the end of the term, you can receive all of your premium back. And premium is just the amount that you pay monthly to have the product or the coverage. And then so that's a temporary. And then on the permanent side, you can either have a whole life or a universal. And the difference between those two, when you think whole life, think fixed or guaranteed, right? So whatever you're contributing to monthly, that's going to be the rate that you have throughout the duration of the policy. And also guaranteed. So guaranteed, you have a guaranteed return amount that you're going to receive from this policy. Now, on the other side, and so the people that get whole life, obviously they want coverage that's going to last in the duration of their lifetime. But they also like the fact that, they get a guaranteed return. Now, if someone's going to choose a universal policy, which is also a permanent policy, they're doing so not only for to make sure that they have life insurance that's going to last in the duration of their lifetime, but they also like the idea that they're going to get higher returns. And then one specific policy that I think I can give the most value in terms of life insurance is speaking on the index universal life policy. Now, with the index universal life policy, this policy is going to be a permanent policy, but it's going to mirror the stock market. And so if we take a look at the stock market the past 20, 30 years, we show that it's green, meaning that it's positive. It might fluctuate, it might crash, it might go down, but over the span of 20, 30 years, you're averaging, around 8%. Right. And so with that, with the index universal policy being linked to the S&P or the stock market, you receive market-like returns. Right. So, and then the way it works is why people started using life insurance policies as retirement accounts or supplemental retirement accounts is because they reap all the benefits of market growth, But when the market crashes, they don't lose anything out of their policy. And I'll give you guys a visual here in a second. But people are starting to utilize index universal life policies as supplemental retirement income because they don't have to pay taxes on what's paid out from your policy. Now, within this policy, it's all based on how you structure this policy because it's flexible. You can contribute more, you can contribute less. And based on how the insurance agent structured the policy, your monthly premiums that you're contributing to this policy either go within your cash bucket or they go towards the life insurance bucket. Now, if the policy is structured in a way that goes towards the life insurance bucket, then the commission for the agent is going to be a lot higher. All right. So you got some bad apples out there that build these policies so they can fill their pockets. And so what you want to look for when you're shopping these type of products is you want to look for minimum death benefit, maximum cash value, right? So if you're funding these policies for 15, 20, 30 years to be supplemental tax-free income, you want to make sure that most of the money you're contributing is going to that cash bucket. Now, on average return, what we've seen in the market over the past 30 years within the index market is a return of 9%, right? So it outperformed the S&P 500 because the S&P 500 at times took hits of negative 20%, right? So while the stock market was taking hits of negatives, the people that had their money put into these life insurance policies lost zero. So the following year, when the market corrected itself, they had to make up that 28% before they got back into the green. And so what it looks like over the span of the next 30 years is it's going to outperform the S&P 500 based on the data that we have. And so these are what's considered LIRPs, so life insurance retirement plans. And just to give you a visual of what it looks like here, how am I doing on time?
You're good. Go ahead.
Okay, great. All right. So I'm going to share my screen with you. Where am I not? Here we go. And so I have a client I'm working with here, and they want to get their daughter get started on a retirement account. Right. So let's go here. And so basically how it works is you run illustrations. And so illustration is going to take the data from the last 30 years and see what it does. Based on the data from the last 30 years, we can dictate what's going to happen in the next 20 years. It's weird I don't have it here, but we'll just take an example that I've been working on here. So let's go here. Right, and with that, you mentioned that you touched on living benefits. Living benefits within your life insurance policies, that's really the only type of policies you want to go for, right? Traditional policies, traditional life insurance of the past was you had to die to reap the benefits of it. Policies today come with living benefits, the chronic illness, the critical illness. The benefit of that, if you haven't already touched on, is, most people have health insurance. You get sick, your health insurance is going to take care of your doctor bills, right? But what's going to come in and take care of your mortgage and make sure that your family doesn't experience any type of financial burden because you're sick and you're not able to work? Well, your life insurance will accelerate the death benefit while you're still living. And so I recommend having that on all your policies. And specifically with this policy here, which is the Index Universal Life Policy, it comes with the policy. And then you want to also take a look at the companies. F&G Life is one of the best companies for IULs based on the data and how long they've been in the market. And so if we take this illustration here, this lady here, she's 25 years old. And her thought process in utilizing life insurance is, I don't want to run out of retirement income. Right. And we see the way the economy is going, the way taxes are in comparison to like a 401k. A 401k, when you retire, Uncle Sam is going to get his portion of that 401k. So if you have If your retirement account, your 401k has $500,000 into it, Uncle Sam is going to get whatever the tax rate is at that time. So people are seeing that and figuring out like, okay, how can I keep most of my money in my retirement years? And so here's a way to where you keep all of your money in your retirement years. So if you have $500,000 in a retirement account or your LIRP, your life insurance retirement plan, you're going to get that full $500,000. And I'm going to explain how.
So is this something that kind of replaces when you said this will cover like your mortgage and other kind of expenses, like a supplemental policy, kind of like what Aflac or somebody else would do? Is that similar?
Correct. Yes.
Okay.
Yeah. So I look at it as like a Swiss Army knife. So instead of getting these individual products, maybe you might go get a cancer policy. You might go get an individual life insurance policy. You might go get a accidental death policy, right? So it combines all of that in one policy. And then the payouts can be utilized for different things. Mortgage payments to pay off the mortgage. And just a side note here, people are investing into life insurance more so now for the living benefits of it, right? And one of the biggest benefits of it is going to be the tax-free retirement income.
Is that why you see a lot more insurance agents going into the financial planning side of things?
Absolutely, yes. So
insurance.
Yep. So you have what's called these fixed products, right? So these fixed products come into place so that you don't lose any money, right? So let's take a look at what happened with the 401k a couple years ago. I think it was 2022. People are preparing for retirement, but their 401k took a hit. Now, if you're in your 20s, you have time to make that back up and still have a pretty good retirement. But people that are preparing for their retirement within the next 5 years, they don't have that time to make up what they lost. So they lost, let's say, I think around that time was like 30,000. Well, that's $30,000 taken out of your retirement income, living. So in 2022, the people that had their money in a fixed product, whether it been an IUL index universal policy or a fixed annuity, they lost zero. And so that's really the idea of utilizing these products for reasons. Number one is going to be the security of it. You're not going to lose any of your money despite market volatility. When the market drops, you don't lose anything. You benefit when the market gains. That's number one. Number two is going to be liquidity. How easy is it for me to access this cash? It's as easy as filling out a form, and then the life insurance company gives you your money within 2 to 3 business days. You don't have to qualify to receive the funds from your policy. You don't have to do any type of refinances or fill out any forms to see if you get approved for your money. So that's number two, liquidity. Number three is going to be the tax benefits. So the tax benefits is pretty much allowing you to access this money tax-free, right? It's going to accumulate tax-free and you're going to be able to access it tax-free, right? So we have liquidity, security, and then the taxes, which is why people are attracted to these type of products. And so if we are structuring the policy the correct way, we want minimum death benefit and then maximum income, right? And then there's an option to have it switch. And so I'll explain this. So option A is a death benefit that's flat, right? So we don't want it to increase. But the best way to structure it is so that when you start this policy and you start investing into it, you want most of the money to go into the cash bucket, right? So if you make the death benefit as low as possible starting out and have it increase over time, basically the money that you're putting in, X amount, is going to go to the cash bucket because the life insurance is not high on it, right? But if the life insurance was high on it, most of your money would have to contribute to life insurance. Life insurance is not going to be free, right? But we can put it to switch at a certain age so that it levels out, so that it stops increasing, right? Because the more life insurance you have, the more you're going to pay for it, right? But in beginning years, as you're contributing to this policy, you want it to be low as possible. So what it looks like for this individual here, she said, I wanted to contribute to my retirement, and I want to retire retire early. Excuse me. So she is saying that I can contribute. I think she said 500 a month. Yes, so 500 a month in my retirement years, with the idea that this is going to make sure that in my retirement years I don't run out of money. Also, that I have coverage in place as well. So if we go here monthly, and I'll give you the illustration. Okay, that should have pulled up. But if it doesn't pull up, I can just explain it. But I would like to give you a visual. Just an up to it cannot be greater. Okay, so it's maybe something I did on my end. 1 second. And in terms of like, well, how much do I need to contribute? Should I contribute 500? When you're contributing to permanent life insurance policies, or specifically index universal policy, one is going to be based on your budget. What do you feel comfortable contributing monthly? What's going to be something you can contribute monthly and it's not going to take a hit on your daily living expenses? And then also too, if things get tight financially, that this isn't something that's going to be thrown overboard. Right. So we want to find something you're comfortable contributing to. And then on the back end, what do you want your policy to do for you? If you have a set amount, well, I want this policy to pay me $50,000 tax free in my retirement years. Then, okay, we have to do some reverse engineering. Well, that's going to take you contributing $1,000 a month, or $500 a month, whatever that number is. That's going to benefit you on the back end. All right. So, which is also why people don't look at this as an expense. It's an investment, because what you put into this policy on the front end is going to benefit you on the back end as well. Let's see why this isn't doing what I asked it to do. The team.
While you're doing that, Mr. Petrie has a question.
Okay.
Yeah. So thank you. As you were talking about that, I was wondering, especially on the living benefits portion, there are some qualifying things that you have to do. It just can't be any illness that allows you to do that. Isn't there some guidelines on that we need to be aware of?
Correct. Yes. So, your 6 daily functions would automatically, accelerate those benefits. So if you're not able to change your clothes by yourself, if you're not able to transfer in and out of bed, if you are not able to feed yourself, if you just can't do 2 of those 6 daily functions, that would accelerate the death benefit. Also, too, depending on how serious the illness is, will determine the percentages that you are accelerated on your death benefit.
Okay. And then secondarily would be that's based off of the death benefit, not necessarily off of the amount that you have contributed up to that point.
Correct. And so how it works, anything that comes out of the death benefit, let's say you accelerate, let's say you have $500,000 death benefit, and then you're accelerated up to 90% of that. At that point, that would just be whatever death benefit you have left, right? So if something happened to you, you would get the remaining amount.
And that would be against the death benefit, not necessarily the value that you've created within the policy at that point.
So they act as one, right? So let's say, for example, that's a great question, because people are like, well, if I die, what happens to the cash that's in my policy, right? Kind of along the same lines. So you have the cash that's within the policy, and then you have the death benefit, right? So as the policy, again, is growing or accumulating in value, starting out, let's just say, for example, you got a policy, you got started with a policy, you're contributing 500 a month. Well, year one, let's say you have a $200,000 death benefit. If you die in year one, you've only contributed X amount, nowhere close to 200,000. So what they're going to do is they're going to give you the difference. So whatever the higher amount is, that's what the life insurance company is going to pay out. Life insurance is to make you whole. And so whatever the difference is, that's what they're going to pay out. Does that answer your question?
Not completely, but I'll let you go ahead and continue. Thank you very much for that answer, though.
Yes, sir. So if I can pull up a visual, I can show you here. Maybe if I go to another one here.
While you're doing that, let me to kind of piggyback on Mr. Peachy's question. Are there any restrictions or limitations from you starting this kind of a policy? So say, for instance, you've been diagnosed already with a long-term illness that's going to end potentially with one of those, with at least two of those six illnesses, ailments, conditions
Bodily
that
functions.
you talked about.
Bodily
Function.
function.
Those functions. If you know that you've gotten diagnosed with that, and that's the outcome, would you be restricted or limited from having one of these policies?
Yes, you do have to qualify.
Okay.
You do have to qualify, and different carriers have different restrictions. They have different underwriting appetites. But when it comes to taking advantage of these type of policies, what I've seen done is if the individual could not qualify, they will get a family member, maybe a younger family member that has no pre-existing health conditions, and they would start the policy under as them being the insured, and that individual will be the owner of the policy.
Okay.
Okay, but in that case, the premium would be based off of
The
the
younger person.
insured, not the owner.
Correct.
Based
Correct.
off of it would be a rated policy based off of their existing illness. Is that correct?
That is correct.
Okay. Right. So
Their
I think that
only-
was Nia's point, was making sure that, you know, if I already know I have an illness, what type of rates am I going to be paying for the type of coverage that I could get and stay within the budget? Like with all insurances, the earlier we start and the healthier we are when we start, the more advantages and benefits we can derive.
Correct. Yeah. So based on the underwriting process, you know, there you have simplified issue to where, you know, you are issued without very little underwriting process. Like you don't have to take a medical exam, and typically those are paid out, or you get the fixed death benefit. But if you have to, like, pre-existing health conditions based on the underwriting, you can have a graded benefit. And graded just means that you will, let's say you die within X amount of time, within 2 years, then at that point you get a percentage of the death benefit if it's graded. And then you also have a guaranteed option. Right. And this is all based on your underwriting, your pre-existing, wherever your health is. You have a guaranteed option. So the guaranteed option is in place for people that can't get approved anywhere. The insurance company is going to insure you no matter what your pre-existing health condition is. You're going to pay a little bit more for it, but they do have those guaranteed issue products.
Did I hear you correctly when I heard you say, I thought I heard you say that you can add this to your existing policy? So say, for instance, if you've got a whole life policy and you want something like this, can it be converted, or how does that work?
No, so conversions work within the same insurance carrier. So if you have a term policy with X carrier, you can convert that over to a permanent policy, whether it be an IUL or a whole life. But you cannot convert a policy from a permanent to any other. So if you have an IUL or index universal policy, you cannot convert it to a whole life, and then vice versa. You can't convert a whole life to an IUL. So the conversion only works going from a term to a permanent within the same carrier.
Okay.
Okay.
And this my illustration isn't coming up for some reason to show you how it works, but basically what they do is they take the last 30 years data and they illustrate the next 30 years, and the illustration would have shown the individual contributing $500 a month to this policy, and then the death benefit over time would increase. But while the death benefit is low and increasing, most of the contribution is going to the cash bucket. And so the IULs operate similar to a fixed annuity as well.
Question about this. Since a lot of people are using the insurance benefits for retirement planning, long-term planning, how does this impact them qualifying for medical benefits down the line for Medicare, Medicaid, things like that? Because if you've got these liquid assets that are readily available to you, could that potentially disqualify a senior from receiving or qualifying for Medicare?
No, it will not. No.
Okay. All right.
But I guess her question, sir, I guess her question on that would be then, why not? You know, what feature of the insurance policy is it that does not include that as an asset that needs to be considered for Medicare purposes or Medicaid purposes?
Yeah. So life insurance is one of those security products. It's a non-qualifier product. And so that whatever is paid out from your life insurance policy doesn't have to be reported as income, as well as it being considered life insurance. So it would not interfere with any other benefits that you do have or you are receiving.
I think, Nia, principally, since you have not received it, and the best you could do at this point is borrow against it, that's not considered income. So that's might be why it's not included in the calculation for Medicare or Medicaid.
Correct. Yep, that is the process. Yep. So you can withdraw X amount from your policy that you've contributed to and not have to report it as income. And then once you exceed that amount, then it converts over to loans, policy loans. And with loans, you don't report that as income as well.
So you're like dipping into your own savings account potentially.
Correct.
What you put into it is only the part that you can withdraw from it. But then anything above that, you'd have to then take out and borrow from your policy.
Correct. Yes.
Okay.
And then when you've borrowed from your policy, you're borrowing against the benefit, the face amount of the death benefit. So that in the event that you have passed and you did not pay back those loans, your death benefit is reduced by the amount that you've accumulated over that time period.
Well, as long as I got enough to bury me, I don't care. That's all they need.
Well, this was about no GoFundMe accounts anyway, right? So.
Exactly. Yeah. No need to create a GoFundMe. No fundraisers, no barbecue dinners and stuff like that. There you go. and I got a good quality of life, you know.
Yeah.
Go right ahead, Monet. You had a question?
Yes, I have a question about borrowing against. So when you borrow, is there interest rates associated with that to pay it back?
Correct. Yes, there is going to be interest rates to pay it back. It is a loan, but you can have two types of loan. You can have just a normal loan right, that you have to pay back. It has the low interest rates, typically with all life insurance policies. But you can have what's called a participating loan, right? So let's say, for example, you want to borrow $500 from your policy. You go to the life insurance company. You have, let's say, $5,000 in there. I would like to borrow 500. The life insurance uses your cash value as collateral, so they would loan you that 500, right? So essentially, your 500 will still be participating within the market growth.
Mm.
And then again, if you never pay that back, it comes out of your death benefit. Yeah.
But
Did
yes,
that answer your question?
Say that again. So if you don't pay it back ever, then if something happens to you, it's going to be deducted from that death benefit.
So if you got
Correct. Yes.
if you got a $10,000 policy, you get now 9,500, or your beneficiaries get 9,500 because you never paid back the 500.
And I like to understand because I had a client recently bring up that she is starting, well, after she going through the process of getting the policy, and her biggest thing was being able to borrow from it and then pay back into it. So from a financial coaching standpoint, I just kind of wanted to see what that looked like, especially when it comes to paying it back. Like, is it more budget friendly than her going and applying for a traditional loan? And like, as far as like interest rates, so is it like lower than like interest rates, like from like if I go to Wells Fargo and apply for a loan?
Nia, can I answer?
Yeah.
Yeah. So typically, yes, it's going to be a much lower rate. All right. So in other words, when you borrow against the policy, you might be paying 5%, but your policy is actually paying you 4%. So the real net effect of that loan, like he just mentioned, your $500 is still participating in the value of your policy, but you borrowed against it. So you might effectively be paying a 1% or 2% interest rate on that $500 versus whatever you were going to get from Wells Fargo or anywhere else. So, but all that can be spelled out by your insurance agent before you would initiate the loan product.
Go ahead, Cortez.
Yeah, or even you could net, 4-6% based on the market. And then I was able to pull this up for you just so you can get an idea of what it looks like and be able to break this down for you as well. This is what's considered an illustration for your policy. And so in this, it's going to have the descriptions of how the riders work, break down here. But I want to focus on this here and show you how to read these. These are illustrations. And so this is the client that is
me in, right?
Oh, okay.
What was that?
I don't know.
Yeah, you got to zoom in, and we can't see.
Oh.
Still?
I know we got 40-year-old eyes over here.
Hold on. How's that?
Yep, you're good. Okay.
All right. So here, if we take a look at this, the client is wanting to contribute. What is this?
That's $500 a month.
$500 a month. Thank you. So $500 a month, right? And so these three columns right here, you have the guaranteed, you have non-guaranteed, and then you have another non-guaranteed. Now, the way to look at this is, let's go down here to, in comparison, let's say you got a life insurance policy, you got a 30-year term is how I like to compare it. You got a 30-year term policy. So in 30 years, instead of having a policy or a coverage that's going to end, this is what your policy will look like. And the account value, I just want to make sure I have the lines right. So the account value here in the first column, let's see if I can highlight it. So this here, this is the guaranteed assumption. So this amount that you're going to have in your policy in 30 years, or whatever year count you want to take a look at, is basically saying that the stock market for the next 20 years, 30 years, isn't going to make any money. Zero. Right. So we know the likelihood that that's not going to happen based on the last 30 years. Based on the last 30 years, we saw the market do 6 to 8%. Right. So this is just giving you a visual of what it looked like as far as like your cash value growth within your policy if the market didn't do anything. The next one is going to be if the market did 4 point, see the number here? This is basically saying over the next 30 years, the market is only going to have a return of 4.5%. Another highly unlikely, right? So here again, if the market does 4.5% over the next 20, 30 years on average, this is what your cash value will look like. And this last column here,
this is contributing $500 a month.
this is contributing $500 a month. She's 37 years old. And then the last column here is basically saying that the stock market over the next 20, 30 years is going to have a return of 6%, right? So this is a conservative illustration because we have data that the market has did 8% over the last 20, 30 years. So this is a conservative look. So we're taking a conservative look over the next 20, 30 years. This is the cash value that my client here will have within their cash bucket, within their life insurance policy, again, seen as tax-free retirement income, right? And so the way the illustration works is over here, this amount is basically saying what is going to be paid out in their retirement years. So that's what, 37? And this is tax-free income. And then another thing I'll explain here or point out is this is another chart I like to look at. We talked about what's happening in the market over the span of 20 years. So from 2004 to 2023, the S&P 7.7%. Your policy, go ahead, I'm sorry. All right, so here, this is the S&P 500 from 2004 to 2023. We see the losses that it's taken. 2008, it was negative 39%. If you look to the right, life insurance policy here, that same year, gained 0.25%. All right, well, let's times that out. It showed that the index of the life insurance policy outperformed the S&P 500. Right. And those are the two illustrations that I like to point out. And then also breaking down how to read these tables here. And so the last thing that I'll point out here is the death benefit is increasing over time. So let's go back to this column here, the non-guaranteed. The contribution is $500 a month or $6,000 for the year, but the death benefit is low. Now, had we started out contributing $6,000 a year, but we had a set death benefit at $500,000, the cash value would be ate up from the death benefit. And so the way we structure it is to keep it low during your contribution years. And when you stop contributing, then we level it off. And so that it's not increasing, so that it's not eating into your cash value, because your cash value is what you want to be paid out to you during your retirement years. And that's all based on how you set up the policy and structure the policy on the front end.
I'd have to be looking at that in front of me.
Yeah.
And look at those side by side to see, because those numbers were kind of going back and forth.
Yeah.
Oh, I got you. Yep.
Put that screen back up for her for a minute. And I want to point out some numbers for her to look at. Okay.
Okay. Here, let's go share my screen. All right, so here we go.
Yeah, right there at the top. So Nia, one of our guests that asked the question said that she was 40-year-old eyes anyway, is what she said. Okay. So this was a great example for him to share with us because it relates to the people on the call. Most of y'all, not me.
Most of,
I
most of them.
got much older eyes than that.
I got older eyes too. Well, go ahead.
Okay. But the $6,000 a year, notice a couple of things. After that 10-year period, you paid in 60,000, but look, your account value is 46, and you have a death benefit of 196. All right, and that's just on your guaranteed assumptions. Right, but now scroll down to that 30-year mark that we were looking at, and notice you paid in 168, but your value is still 125. So not much has gone. You know, most of your money, yet you've been protected all that time. Most of your money is still in your account that can now start being paid out in conjunction with whatever Social Security is remaining at the time that she becomes 67 or 68. All right. But that's some of the advantages. And then, like you said, depending on what you're willing to risk as far as go to guaranteed or go with an interest rate cap, the IUL is a very valuable product that can be used for a number of things. In addition to being able to borrow against it at some point if you need it to start your business or to help fund your child's college or things of that nature. There's things, it's a flexible program that adds value both while you're in it and if you have other life needs. So I like this example that he shared with us and look forward to hearing more about that. But thank you for bringing this back up for us.
Yes, sir. And also some books on the subject. The Power of Zero, the Tax-Free Retirement. It's all associated with utilizing life insurance as a supplemental tax-free retirement income.
So Nia, I'm going to go ahead and do a late selfless plug. Just this morning, my session, I do a monthly session called Wealthy Wednesday, and today it was closing the racial income gap.
Mm-hmm.
And so it was talking about both how to utilize home ownership and life insurance. This is Life Insurance Awareness Month. So how to use life insurance, especially the IUL, for helping to close the income gap that exists between white and black households nationwide. So that's why I really want to sit in on this one today, this afternoon. So you guys just kept me busy all day in meetings, Nia. You know, you're very good at doing that and always with great content. So I can't miss what you do. I have to come in and at least listen. And we need to get together and figure out how to help you get more people tuned in on a regular. Okay.
Indeed, and we're thus switching to YouTube. We're gonna see how that works. So we're live on YouTube currently, and you know, distributing the link for people to go back and actually watch this too. So
yeah, that's valuable. I talked to Paul about that. He and I were at a meeting last week or the week before, and we had a good conversation about how much I enjoy your presentations and the way that you moderate the activities. And so, just keep up the good work, young lady.
It's a joint effort. It is a joint effort. So you definitely wouldn't be able to do it without the participants and without all of the partners, you know, that do contribute. So so thank y'all very much. Appreciate you tuning in. Was there anything else that you wanted to add about any other policy real quick, Cortez?
One last thing that is very easy to do that we don't think about when it comes to life insurance is linking it to a revocable trust. Right, so you can link your life insurance policy, list your revocable trust as a beneficiary to your life insurance policy. Kind of go into the terms of creating your own family bank, if you will.
Okay. Any other questions or any additional comments or anything like that? Mr. Petrie, well, I got you, or actually, I'll talk to you offline. I'll give you a call after.
Okay.
Yeah, I'll give you a call afterwards. Monet, was there anything else that you wanted to add?
No.
Oh, Cortez, you kind of came in talking. You didn't say, "Hey, I'm Cortez Page, Page Evolution Insurance. This is how you reach me." You want to put your contact information in the chat,
Yes, no,
kind of tell everybody how to reach you in case they got more questions and want to know more information and more details, because definitely each individual is going to need some individual one-on-one attention, or as it comes to their own planning and things of that nature. So they'll definitely need to be able to reach you. And
okay,
Cortez can be reached at 832-371-4856 or Cortez at pageevolutioninsurance.com. You always forget the
yes,
.com.
yes. I don't know what's yes.com.
I'll include that information as well as the information for Family Houston. If you'd like to receive or more information about one-on-one financial coaching, that information will be included as well. I will email a link to this YouTube presentation so that you guys can go back and actually watch it again for a little bit more information, and also asking you to pay it forward, share it with somebody else that may not know any of this information, that there are options out there. It is available to you. It's just a matter of you actually getting with a local agent. Stop buying your stuff online. Talk to somebody in your neighborhood that knows somebody that knows somebody that has gotten this planned and figured out and things of that nature. You don't get that personal service and being able to ask those kinds of questions by, just jotting in information online, because you just don't. It's not the same thing. You got to talk to people, you know?
Well, and I like to say to folks, you don't know what you don't know. So
Exactly.
you can't ask, you will not get the right answer unless you ask the right question.
Mm-hmm.
All right. And even then, if you're not asking the right question to the right person, you might not get the right answer. So
Indeed, indeed, indeed. All right. Well, thank you all very much for joining us this afternoon, for joining and participating in this A Month of Service collaboration. Thank you to all of our partners and to all of our presenters, Cortez, Ms. Monet, Mr. Petrie for chiming in. We appreciate you as well. You want to give a plug for Wealth Wednesday and NARAB and what you guys are, since you're on the line too?
no problem. My program is only on the first Wednesday of the month, which was this morning, and it's at noon. But we do what she does on a weekly basis, multiple things. We just do it the first Wednesday of every month. We have different topics that we talk about. So, for example, next month will be about business. We have a MOU with Liberty Bank out of New Orleans that they have loans for entrepreneurs, and so we'll have a conversation around that. In November, we'll probably be talking about benefits for veterans and things of that nature. But we will also be having another Community Wealth Day, Building Black Wealth Day in Atlanta in November. And then December, we'll be talking wills, trusts, estate planning, things of that nature. So we try and cover all the topics, start conversations, share information, is what we try and do. We don't do any selling. We just do consulting. And then, like Nia just did, advise people to talk to somebody. You can ask some questions on the internet, but you can't get the personal attention that you need for such important decisions in your life. So thank you, Nia, for allowing me that minute to do that.
Absolutely, absolutely. The whole point of the collaboration as well as the Money, Health, and Wealth Financial Capability Series is to get people starting to look at things a little bit differently. You know, what actually can improve your quality of life? What is it that you've been doing that's not working for you that you want to change, and how do you change it? What's going to be the plan? How do you do that? Who do you talk to? What resources are available to you? And let's go ahead and get it done. So that's why we got these folks like you out there, and it's going to help continue to get this information out to people to try to get them thinking a little bit differently about money. So what you're like I mentioned about the grandmother being there talking to the insurance man every month. We don't talk to the insurance man every month. He don't have to come by and collect. But, what's a different way to now start doing that is by, still sitting down and talking to somebody. You still need to have that personal engagement for your own individual situation, but it's just not the same as what you used to do. So how do we do it now? So thank y'all very much. Ms. Leticia for joining in, get the power of zero that was referenced. If you guys have any other questions, if there are not any other anything else that you guys would like to add, tomorrow we will be at the Third Ward Multi-Service Center talking about the wills and advanced planning and why do you need it. That is one of our first in-person session that we haven't had that one in quite a while. Attorneys from Lone Star Legal Aid will be talking about and providing you all with the templates of what makes up an estate plan. Why do you need one? How do you create it? How do you get it notarized or executed? Thanks, Cortez. I'll make sure that gets shared as well. But if you are available tomorrow to join us at 1 o'clock, it will be online as well as in person. Again, we'll be providing you with the templates to create your own estate plan. And later on in the month, I believe it's the 27th. Is it the 27th?
26.
The 26th will be our pro
No,
se,
no, 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 24th.
the last Tuesday of the month.
The 24th.
Whatever that fourth Tuesday is, we will be available for you guys to bring those estate planning documents out that you have created yourselves, to have an attorney to look over for you. The attorneys from our legal aid organizations, they work on an income basis only when it comes to creating those documents. So they will not be able to create documents without going through an actual intake process and so on and so forth to see if you guys qualify. However, if you do have questions, if you want them to just review documents for you, we will have volunteer attorneys that will be available to look over those documents for you. So if you have questions about a trust or questions about the power of attorneys and things of that nature, then that will be your opportunity to come out and join us for that as well. So with that being said, thank y'all very much. Y'all will can have the rest of your evening. You can go and relax and relate and release, Mr. Petrie. So you're done with your meetings for the day. And
No, I got one scheduled with you now. You're gonna call me, so.
oh well, yeah. So sorry, you're not quite done yet.
Like I've been having meeting back to back all day too. I barely ate.
I didn't either. I really didn't either.
I'm
But
nearly about to pass out.
well, we don't want you passing out, Monet. So you go ahead on and get yourself some lunch, or some breakfast, some lunch, and pseudo/dinner. Rachel, is there anything else that you'd like to add, or would you like to introduce Ms. Carlson really quick, even though we're going to give her a formal introduction later on? So
Yeah, so I have been temporarily assisting with the month of service program from our previous coordinator that went to retirement. And so, well, I say retirement, but I've heard she's back on the she's back on the scene.
yeah,
Couldn't hold her down for too long.
no.
She's just too much of a busybody. But 6 months later, we're here, and now we have found our new employee that will be the dawn coordinator for the month of service program over our will, assisting with the will clinics and everything. So she has been with the city, so she's just transferring departments. But we are fortunate to have her here. She's had experience with outreach, primarily with our mayor's office of people with disabilities. But we're glad to have her here with the Office of Neighborhood Engagement, Cecile Carlson.
All right.
Hello. Can y'all hear me?
Yes, ma'am.
Yeah.
Hi. Thank you so much, Rachel, for that introduction. Yeah, just second day here at Dawn. Really happy to be here, and thank you for all of that information. And Naya, we've been communicating via email. I'm looking forward to officially meeting, setting time aside for that. But thank you so much to our guest speakers for the information. I certainly learned a lot, and I'm excited to move forward with the month of service. So thank you so much.
All right. And we will be back as far as our money, health, and wealth next month, and we'll be talking about savings and creating a rainy day fund. And then the month after that, we'll be talking about our holiday spending, since we're coming up on holidays already in the next couple of months. Can y'all believe that? It's gone by so fast. So
This is
thank
the
y'all.
time for it. Fast forward.
Indeed, I've seen Christmas stuff in stores already. I'm like, it's August or September. Just like, goodness, my God. But at any rate, I digress. Thank y'all again. Cortez, appreciate you. And I will be in touch with you soon as well. Monet, if you have any other questions or if you need anything else from me, then feel free to reach out. If there are any workshops, I will be sending out a copy of the schedule for this month to everyone as well, with all the workshops that we've got scheduled. If there are any that we do not currently offer that you all may be interested in, then please feel free to reach out to Rachel or myself in regards to talking to us to see about what we can get planned for you guys. So y'all have a good remainder of your evening and take care of yourselves. Stay safe, and we will see y'all next time. Go ahead and get you some food, Monet.
Thank you all.
Bye-bye, y'all.
All right, thank you. Stop the. Hold on, I gotta stop the. Okay.